Hi everybody, Callum Ethorn here, Amicus Home Loans. Just put a video together to help people out with their home loan repayment options during this lockdown and their inability to earn income. So here goes. So first of all, the options are interest rates, loan structure, optimum for you, lower your principal and interest repayments, interest only repayments, mortgage holiday, better known as a repayment deferral, borrow more money. Firstly, interest rates, loan structure, optimum for you. Now, this should be the first step to any action. Can you lower your underlying interest rate cost? It may be beneficial to break a fixed rate and refix onto a lower rate. Breaking a fixed rate from a higher rate down to a lower rate generally does incur a fee. So it'll be whether that fee is justifiable relative to what you'll save on the ongoing interest cost. It's a pretty simple calculation that your advisor will be able to do for you. Also, do you have any debt on a variable or floating rate that you can lower down into a fixed rate? Some people got, 20, 30, 50K on a floating rate that might not be working for them during this time. If you can fix that on a lower rate, that would make sense to bring your overall interest rate cost down. There's 1 year fixed options at around 3.09 at the moment, which is the lowest they've ever been, for example. Now, moving on, lowering your principal and interest repayments, pretty straightforward. If you've been paying more than the minimum repayments, you should be able to lower your repayment amount down to the minimum. So that would still be paying some principal off the loan, some of the loan capital, in other words. So that's a good result if you can afford to do that. Next one, interest only repayments. So this is where you just pay the interest payable on the loan. The loan balance will therefore stay the same throughout the interest only period. So simple calculation, loan amount times interest rate divided by your repayment frequency, 52 weeks, 26 fortnights, 12 months, etc. For example, 350K at 3.39% divided by 26 fortnights would be 456 interest only. Somebody paying normal principal and interest off a loan of that size on a 25-year term would be $800 a fortnight. So that would save you that difference there, $240 odd. So that's a great option if you're having cash flow issues, but you know you can afford to pay the interest. That's generally my recommendation to clients first when I'm fielding calls about this, if possible. You can save that money that otherwise would have been coming off the principal, and when this is all over, if you haven't spent it, you've got that there. You could either pay it off the loan or use it on something else. Now, the next one, mortgage holiday repayment deferral. Been getting a lot of phone calls about this because it's been in the media a lot. Touted as a wonderful solution. However, it'd be better to call it a deferral in the media because interest continues to accrue. So the good old banks keep charging their interest here. That's the misconception, is that everything stops. But no, so you make no repayments during the mortgage holiday period, but interest continues to accrue. So your loan will essentially increase while you're not making repayments. Some banks charge the interest in line with your normal repayment frequency. Others just keep it in the background and add it as a lump sum at the end of the period. So for example, if you've got a 400K loan at 4% and you take a 6-month holiday, it would now be $408,000 after the end of the holiday. And you have to pay that $8,000 back plus interest on that $8,000 as well, obviously. So therefore, it's not ideal, not recommended, but for some, it might be the only option if it's got severely affected income and cash flow, and fully appreciate that. So it can be a good option if it lets you keep the house. Now, the next one here, borrow more money and top up. Obviously, you'd only do that if you knew your income was going to be really good, go back to normal after this lockdown. So it's just like a normal loan application, full assessment of income and expenses, but would give you a lump sum now to use however you like. When and how can I make these changes? So they can be made immediately. Banks have got a bit of a process around at the moment, even if you're on a fixed rate. They all can be ended early without a fee, which is another common question. If in any doubt, discuss your options with your trusted advisor or a banker as early as possible. The worst thing you can do is nothing here. So if any doubts at all, ask the question. There are some other options that I haven't covered in here, and the banks all apply these slightly differently, but this is it generally. So thank you for your time, and good luck. See you next time. Cheers.